Now friends, I'm starting with a whole new topic, the taxation of partnership firms, and together with that, the taxation of LLPs, limited liability partnership. Friends, before I go ahead, let me tell you that this particular topic that we are going to learn, it's very manageable topic, and few of the points which are very conceptual point as a part and parcel of some of the clause and sections in this particular chapter. Those things you got to study very properly. Otherwise, computation wise, it is very simple and very manageable. Few technical interpretations are there which you have to pay maximum attention. Now friends, this particular partnership firm, the taxation is basically the extension of our business income chapter. And in the business income chapter, friends, certain adjustments that we already do that. On top of that, we have to do some adjustment with respect to assessing being a partnership firm. Now, whatever that I'm explaining and whatever that I'm saying, wherever I use the word firm, okay, it is equally applicable to the LLPs. I repeat, wherever I use the word firm, or wherever I say the taxation of firm, deduction for firm, this, that, everywhere friends, even the LLPs is covered. So first understanding is the firm's taxation is same and it is equal to the taxation of the LLPs. Is that very much clear? Okay. However, between the firm and the LLPs, there are some differences. Wherever that differences come, that I will tell you. That for the purpose of this section, there is a difference. Tax treatment is different. I will tell you. But in general, by default, the taxation of firm is equal to the taxation of the partnership firm. Now, friends, first of all, straight away, let me give you a very basic example of tax liability calculation. See, when it comes to the business income, we always start with the profit as per P&L. This is how we do that. Then we do all the adless adjustments. Okay, all over like cash disallowance, 43B, related party transactions. They are all routine business income disallowances or any special adjustments, whatever. Okay, you have to do that. Okay. Now, when it comes to the assessing a partnership firm, you have to do now extra adjustment. Okay. Now, one is the interest to the partners and remuneration to the partners. Whether salary, bonus, remuneration, commission, by whatever name called. So anything which is paid to the partner or remuneration paid to the partner, first of all, we have to add. Okay. Just like, we did so many times the adjustment that the book depreciation add and the tax depreciation less. We always did that, right? So same thing here, that whatever is as per the books, interest to add, and whatever as per the books, the remuneration that you have provided, you have to less. Okay. Now, these two things you have to add first. Okay, so this is add. And very natural thing that only thing if it is provided, you will add. You will not add from the air. Okay. Then you will get one figure. Okay. From this, you have to give the interest as the reduction first. Interest to partners. Okay. This you have to give the reduction first. Now, there is some technical thing which I will keep on telling you, but as and when the due course of time comes. But right now, make a note that this interest adjustment you will have to do first. Okay, this is very important. The interest will be allowed to you as per the conditions of section 40B. So under section 40B, interest to partner, there are conditions. Okay, so you have to satisfy those conditions. And if you satisfy the condition, you will get a deduction with respect to interest to partner. So I will say that if it is within the limits of the law, which is covered by section 40B, then you will get the deduction. Otherwise, you have to forget it. Okay. After doing this particular interest adjustment, the figure that you will get is business income before remuneration, and business income before remuneration adjustment is also called as a book profits. Okay, but if you want to write, you can say that this is your business income, but business income before the adjustment of the partner's remuneration. Okay, now this book profits is technically defined under the law. That is the reason I told you that it is after the interest adjustment is completed. So by mistake, if you do book profit adjustment first and then interest, it is absolutely a wrong answer. Let me tell you, it is absolutely a wrong answer. So you have to keep it in mind that first you have to consider the interest adjustment. After that, whatever figure that you get, that is called as a book profits, or you can also call it as a business income immediately before the remuneration. That also, if you want to write, you can write. Okay. Now from this, you will get a deduction with respect to remuneration, salary, bonus, remuneration, commission to the partners. So this is all adjustment with respect to the partners. So this remuneration adjustment is always to be done second. This remuneration adjustment is to be done always second. Okay. Now, do the remuneration adjustment, and after that you are going to get the business income. And after that, if there is any carry forward, set off and all that, we can do that, all these things in the routine manner. Okay, so first interest adjustment and then the remuneration adjustment. Okay, now first of all I would like to introduce the conditions of section 40b. Okay, so I will take you to some barrack provision before I can give you one detailed example, which you will copy it down, of course, and you will have to copy it down, darling. So first of all I will go to some barrack provision. Okay, see, for some of the hardcore basic barrack provisions I want to first of all bring to your notice, and that is see the partnership form, the definition. Okay, the partnership form definition includes the limited liability partnership, and that's the reason I told you that everywhere under the law, wherever we make a reference to the firm, is the same reference we make it to the LLP, because the definition of the firm includes the LLPs. However, in some of the sections there are differences, but there, wherever there are specific differences, that we will consider separately. But this is by default understanding. Okay, then section 40b. Now before I go to section 40b, let me tell you that section 40b as a section number wise, I repeat, as a section number wise, it comes under the head business and profession. Section 40b comes under the group of sections called as section 28 to 44, which is a business income group of sections. And in this series, one section comes section 40b. Okay, this section 40b is a disallowing section. It is a disallowing section. In other words, the intention of the law is to disallow something subjected to the conditions. Okay, there are some people who view this particular section 40b as a positive section, that okay, the partner's interest remuneration will be allowed as a deduction, like that some people will say. Not wrong. In a plain English, nothing is wrong. Okay, however, as per the technical interpretation of the law, section 40b is intending something to be disallowed with respect to the firm's computation. Okay, so I will tell you little technical things only, and that is you have to think like that, something under section 40b is to be disallowed. It is to be disallowed. Okay, something like that. Okay, now see, section 40b conditions. Any payment, salary, bonus, commission, remuneration which is not to a working partner, it will be disallowed. So people who will say from positive point of view, they will just change the grammar and they will say that the remuneration of the working partner can be allowed. Okay, like that they can say. But here the law says which is not to a working partner shall not be allowed as a deduction. Okay, now section 40b, the section which I have given you, this is only the relevant extract in this particular point. But section 40, the heading you will say following items shall be disallowed. That's the reason I am saying the word disallowed at each of the point. Then point number 2, remuneration to a working partner. So now it is a payment to a working partner, but it is not in accordance with the terms of the partnership deed. Okay, that means if your partnership deed does not make the provisions for the remuneration for the working partner, then also it will be disallowed. Okay, so people who will think positive, they will say that working partner remuneration provided by the partnership deed will be allowed. That also you can say. Okay, point number 3, any payment to a working partner, okay, which is authorized by the partnership deed, okay, and the period of authorization is not matching. Okay, the period of authorization is not cover the period for which you are making the remuneration. That means, supposing if your firm provided only for 3 months remuneration, the deed provided only for 3 months, but you provided for more number of months. That means not only that it should be authorized by the deed, but it should also be authorized in terms of the period for which the remuneration etc. has been provided. So clause 1, 2 and 3 is for salary, bonus, commission, remuneration by whatever name called. Okay, now subclause number 4, this is with respect to the interest transaction. Any payment of interest which is made to the partner of the partnership firm, okay, which is exceeding at the rate of 12% simple interest per annum, which is exceeding 12%, okay, which is exceeding 12% simple interest. Okay, so any interest paid by the firm to the partner which is exceeding 12% per annum simple interest, it shall not be allowed as a deduction, because this is a disallowing section. The people who will say that it is enabling section, they will say up to 12% allowed. That also some people will say. Okay, that is okay. Nothing wrong. Plain English wise, it is not okay. Now the payment of remuneration who is to a working partner authorized by the partnership deed, that is all the earlier conditions satisfied, then this is a monetary limit, and this is a monetary limit for the entire year and for all the partners taken together. It exceeds in aggregate of the amounts computed as provided. So this is the monetary limit of the book profits. Okay, so it says that up to 3 lakh rupees of book profits, okay, it is 90% of the book profits. Now I already told you what is a book profit. The book profit is amount after considering the interest. That means just before the remuneration. So that is a book profit. Now some people also confuse. In fact, some of the court people have went to the court also. This in the MAT chapter also there is a word called as a book profit, and in this chapter also there is a term called as a book profit. So you will always confuse. Oh my God, everywhere book profit is coming. But the book profit in the respective chapter for respective purpose is defined. Although the words by the grammatical connotation is the same, but it has a different meaning in the different chapters altogether. So up to 3 lakhs and the balance of the book profit 60%. So 90%, 60%. However, if you have a very less amount of book profits, then up to 1,50,000 there is nothing wrong, because it is 1,50,000 or 90%, whichever is more. Don't do this particular mistake. Remember this very carefully. On the first 3 lakhs, it is 90%. Or 1,50,000, whichever is more, okay, this is whichever is more, okay, and this is the overall monetary limit for all the partners. I repeat, for all the partners taken together for the entire year, that this particular monetary limit will be applicable. Okay, then this is one explanation which will oftenly come in our way, the meaning of the book profits, which I already told you. Okay, this is profits as per the provisions of chapter 4D. This is basically a business income chapter. Okay, and business income chapter is increased by the aggregate amounts of the remuneration payable to all the partners. That means before the remuneration. Okay, so this is business income immediately before the remuneration. That means after considering interest but before remuneration. So it is a business income profit, and keep this in mind. This business income means it is a income tax profit, not as per books of accounts. The book profit word for the purpose of this chapter has got nothing to do with the books of accounts. Okay, so don't confuse book profit under the MAT chapter and the book profit in this chapter. This book profit is profit as per the provisions of the Income Tax Act, computed under the head business immediately before the remuneration. And at various places, the working partner condition has come. So working partner means person who is actively engaged in conducting the affairs of the business. So law basically makes it very clear that you may be working but actively working in the business. That's all. You are a working partner, so your remuneration can be allowed by virtue of section 40B, provided that other conditions are satisfied. Okay, now this much hardcore, what should I say, the basic interpretation is okay. Now I will first of all give you one full-fledged example that how I or you will have to do the computation. Okay, understand this particular example, thereafter you copy down the example also. So this example you better copy down. Okay, now see, in this particular case, how are we going to solve every question and how are we going to answer every question? Okay, we start with profit as per P&L, that we are very much used to now. Okay, so start with profit as per P&L and do all the headless adjustments. Okay, so in this particular example, the profit is including LTCG of 1 lakh of rupees. So I will do all our business income, add less, whatever adjustments have to complete everything first. Okay, and this LTCG was to be considered under the head capital gains separately. That's the reason I have less it in this particular example, and I will show it under the head capital gains also. See, under the head capital gains, I am showing that particular figure of 1 lakh of rupees. Okay, you better copy down this particular example. This is a very good example, but you will take care. Okay, now I am assuming this particular example that there are 3 partners. Okay, so partner is employing capital of 10 lakhs and I am paying interest of 1,50,000. Okay, to each of the partners. So partner A, B, C. Okay, so apparently it is very much clear that I am paying interest at the rate of 15%. Okay, so I will, first of all, I will add the entire interest, whatever is the interest to partners, fully add. interest, remuneration, salary, bonus, whatever to the, what should I say, respective partner fully add. So each one is getting 2 lakhs remuneration. So fully add. Okay. Now see, this ABC partner, A is working, B is not working. Okay. So this is something which we will keep it in our back memory. Okay. So one second, it is. Okay. So all the remuneration, you see partner ABC because of tiny handwritings, but see, one second, I will. Okay. One of the partner is not working, others are working. Okay. Others are working. So first of all, I will add the total remuneration. So total interest add, total remuneration add. Okay, that's the first thing. Then I will get a profit which is before interest and remuneration. Then I will get a profit which is before interest and remuneration. Then I will give the interest deduction. So 12%, 12%, 12%. However, it should be authorized by the deed, period of authorization. All those conditions should of course be there. Okay. So all those things are assumed, that authorization in the partnership deed and all that. So I give 12% deduction with respect to interest to partners. So I give that particular deduction. After giving the deduction, whatever figure I get, I call it as a book profit. Book profit is a profit immediately before remuneration. So in the business income chapter, now remuneration adjustment is the last adjustment. Okay. So on first 3 lakh of the book profit, so out of 13 lakh 30,000, first 3 lakh I take 90%. Above I will take 60%. I'll get a multiplication and I'll get the answer of some 8 lakhs an odd figure. This is my overall limit for all the partners for the entire year taken together. I repeat, this is the overall limit, aggregate limit for all the partners for the entire year taken together. Okay. This is my limit. So 8 lakhs an odd number is my limit. Okay. See, I already mentioned here limit of section 40B. Okay. Thereafter, actual remuneration and the actual partner's condition. So whosoever is a non-working anyway will not be eligible. So non-working partner I will anyway outright, that is one of the condition. So the other partners who are satisfying the conditions like working, partnership deed authorization, period of authorization and all that kind of thing. So when all those conditions are satisfied, so 2 lakhs and 2 lakhs is the actual. So my total actual for all the partners is 4 lakhs, but the limit is some 8 lakhs and odd figure. So the entire 4 lakhs I will get the deduction on account of remuneration. Okay. And after that, I will get the business income. Okay. Please copy down this particular entire example. And after that particular business income, that capital gains point always comes because separate head. Now here in this particular computations, wherever in this particular chapter, this head wise, you better be very careful. Okay. Because your book profit is under the head business. Okay. So by mistake, if you have not segregated capital gains here, then your book profit figures will change. Keep that in mind. This figure will change. Okay. And if book profit will change, then your entire limits and calculation will change and your answer will go wrong. So that headwise computation, you better be very careful in terms of the presentation. Okay. Now I get my total income. Then on that I'll have to multiply the tax liability. The rates of tax of the firm is just 30%. Okay. So for the firm, we don't have some great variations in terms of the tax rates, and applicable surcharge. LTCG multiplied with LTCG rate, other income multiplied with other income rate, and this is my total tax liability, applicable cess, and I get that particular total tax liability. Okay. Now, up to now, the computation tax liability is over. Now you have to do some extra working. See, whatever is the partner's remuneration, which the firm has got the deduction, or whatever the interest that the firm has got the deduction, what firm gets the deduction, it becomes taxable in the hands of the partner. Okay. So see, first of all, this working partner A and C, okay, to 2 lakh rupees I have given the deduction. Okay. So in the hands of Mr. A and Mr. C, in their personal computation, to 2 lakh rupees I'll have to show it as an income. So whatever the firm gets the deduction, I repeat, whatever the firm gets the deduction, the same amount will become taxable in the hands of the partner. Same thing for the interest also. Okay. So whatever the remuneration, whatever the interest, that is one of the point. Second point, whatever is the share of profits. See, whatever is the share of profit under section 10(2)(a). Okay. The share of profits will be exempt under section 10(2)(a) of the Income Tax Act. But how much is the share of profit, a separate allocation you have to show. And in fact, this is a very routine task, but you have to show that particular allocation. Third thing is that in the hands of the partner, all the partners in fact, okay, whatever salary, interest, remuneration, whatever that you get, okay, it will be taxable always under the head business and profession, because section 28 subclause 5 makes it very clear. Interest, salary, bonus, remuneration, commission, which is covered by section 40B of the partner of the partnership firm, will always be treated as income under the head business and profession. So you will wonder, salary, so salary head will come. No, not like that. You will say interest on capital or interest to partners, okay, so you will think that for the interest other sources income will come. No, not like that. So by whatever name called, whether salary, bonus, remuneration, commission, interest, it will be taxable as under the head business and profession of the respective partners. That is one of the very, very important point. Okay, now when we solve many routine questions in the class, no, we sometimes ignore these particular provisions, like, you know, writing under the head and all that. That's the reason I'm telling you in the very first introduction itself that you better be very, very careful. Okay, now first of all, I will show you the allocation of share of profits. That supposing if somebody asks you that how much is the share of profits that is exempt. Okay, so in this particular case, see, my total income is 10,30,000. Okay, and there I have 3 partners. I'm assuming that that is an equal share. So this much share is exempt. So this is normally it is called as allocation among the partners. This is called as allocations among the partner. This allocation is also required of the exempt income. See, one second. This allocation of the exempt income is also required when it comes to section 10 provisions. That is your exempt. You have to show. See, this section 10. You will see this particular explanation. You will have to show that particular allocation, that how much is the share of total income to the respective partners. You have to show that particular working. No great provision, but this should be done. So this is one of the steps. However, when you solve so many questions, no, then this is so simple and so routine steps. So we keep on skipping. But actually in examination condition, you have to show. So this is my allocation. Okay, this is my exempt income allocation. Equal. So 10,30,000 in my example, I have allocated equally, assuming that the share is equal. Okay. Then come to the respective partner. Respective partner A, B, and C. Okay. See, they have got interest deduction. Actual interest deduction is how much? 1,20,000 each. Okay. However, as per the books of accounts, it was 1,50,000. So the amount that will be taxable in the hands of the respective partner will be that amount which the firm has got the effective deduction. That is one of the very, very important point. Okay, so I will not offer to tax what is as per the books, but I will offer to tax in the respective hand of the respective partner what the firm has got the deduction. Okay, this is also specifically provided under section 28 subclause 5 of the business income itself. Okay, see this section 28 subclause 5. Okay, any salary, bonus, this is basically business income. Okay, provided that where any of these item by whatever name called has not been allowed or deducted under section 40B. If any portion of interest, salary, bonus, remuneration, commission is not allowed under section 40B, then under this particular head, that is business income head of the respective partner, it shall be adjusted accordingly. That means what the firm has got the deduction, what the firm has got the effective deduction, the same amount only will be taxable in the hands of the respective partner. Okay, so I got interest of 120 actually, and remuneration only Mr. A and Mr. C had it. Remuneration only Mr. A and Mr. C had it. So that Mr. A and Mr. C will be eligible for the purpose of taxation with respect to the remuneration. Okay, so see these figures. See these particular figures. The remuneration is only included in A and C, and take the total. Okay, this is the personal computation of the respective partners, and the share is already shown as exempt, and for the exempt share this is the allocation which is shown. So this is something which is linked with the computation with respect to the partner, but this what should I say, in lengthy questions we normally tend to ignore it, but it's not that we don't have to do it. We have to do simple calculation only, but we have to show that in the each and every computation. Now once you have understood this, a beautiful example, now I have one more example where basically the situation which is created is of a loss, or you don't have a sufficient book profits. Okay, so same thing. So now I will not go into so much of depth. It will start with profit as per P&L, do all the adless adjustment. One LTCG point was there, that was under the head to be considered separately, same thing. Okay, now after doing all these adjustments, I've added the entire interest, entire remuneration, and my income before interest and remuneration is 1,50,000. But now the interest deduction itself is 1,20,000 into 3, so 3,60,000. See, now the first point will come. If I claim this particular interest as per section 40B on the assumption that other basic condition, theory condition of section 40B are satisfied, like for example, period of authorization and authorization by the partnership deed. So can I convert my profit into losses by claiming section 40B? Okay, so by claiming section 40B, it is converting into loss. Yes, you can do that. Okay, in other words, section 40B is a disallowing section. It is not in fact a allowing section. So effectively what it is doing, that whatever you have claimed, total 4,50,000 interest, from that some portion is disallowed. In other words, what is permissible is permissible, is something like that. So it converts into a loss. Okay, now if my book profits, that means profits as per business income immediately before the remuneration, is a loss, negative figure. So in that particular case, it is up to 3 lakhs, 1,50,000, or 90% of the book profit, whichever is higher. It is whichever is higher. So 1,50,000 will become whichever is higher as a matter of limit. So see this particular point, which I will again like to repeat and bring it to your notice. And I already told you that please copy down the examples, because when I solve the detailed question, these things will to an extent logically get repeated, but better to take down the example. Okay, see, on the first 3 lakhs of the book profit, 1,50,000 or 90% of the book profits, whichever is more. It is whichever is more. It is not whichever is less. So it is 1,50,000 or 90%, whichever is more. So if supposing my book profit is a loss, that means 90% will be a loss. So 1,50,000 will be more, no? So 1,50,000 I will be eligible. I will be eligible for the purpose of this particular adjustment. Okay. So now if I will claim 1,50,000 as a loss, sorry, 1,50,000 as a remuneration deduction, my loss will increase, because anyway my book profit was a loss. So my actual remuneration was eligible actual remuneration is now only 4 lakhs. So whichever is more, okay, so it is only 1,50,000. Okay, and now I'll compare it with the actual remuneration subject to limit of 1,50,000. So now it will be restricted to 1,50,000 because it is a loss. So 1,50,000 I will get the deduction. Okay, and my loss will further increase. Business loss will further increase. Can I carry forward set off this particular loss? Naturally, yes. This loss is permitted to be carried forward, set off. There is nothing wrong. So put it differently, up to rupees 1,50,000 of deduction on account of remuneration, there is nothing wrong, provided that other theory conditions of section 40B are satisfied, and that are those conditions are: it should be authorized by the partnership deed, and the period of authorization should be properly, it should be working partner. So all these are the basic theory conditions which should be satisfied. So this loss will get carried forward. Capital gains will become separately taxable. Okay, and this capital gains I'll multiply with the rate of capital gains and get the amount of the tax liability. So this is my tax liability calculation. Okay, now I will have to allocate my share. So this is a step for allocation. So now my taxable income is 1 lakh. So that taxable income I'll have to allocate. Keep that in mind. This is not done. Anything is not done as per books. It is all taxable figures. Okay. So that I have done the allocation, assuming that share is equal. So it is equal allocation. Now see the partners. Okay. Now partners have got interest deduction in the firm with respect to 1,20,000. So each partner is 1,20,000, 1,20,000. Okay. And my remuneration was limited to only 1,50,000. Remuneration was limited to only 1,50,000 because it was a loss, no, in this particular example. So that 1,50,000 was between the two partners. So actually though they were getting 2 lakhs of rupees, but now 1,50,000 I'll have to convert it into the same to same ratio. So it was equal. So I will say 75 that I'm getting deduction with respect to respective partners, and that 75,000 I'm showing it as an income, and this is my total personal computation of the respective partners. Okay, and whatever the share of profit that you get is anyway going to be eligible for the purpose of exemption in that particular category. Okay, friends, now first of all make a note of these particular rates of taxes with respect to the firm. In fact, this particular small little booklet with respect to the rates of taxes I've already given. So right now I'm discussing the partnership firm. Okay, so partnership firm, the rate of tax is 30%. Okay, and your surcharge will be 12% if the income exceeds 1 crore. So that is a category with respect to the surcharge, and the surcharge is same for firm, LLP, local authority, and the cooperative society. But right now we are discussing only firm and the local authority. So it is 12% if your income exceeds 1 crore, and your cess you'll have to multiply and get the amount of the tax liability in this particular situation. So the tax rates with respect to the firm, there is no great variations whatsoever. Okay, so firm's tax rate and firm's surcharge and firm's cess. Okay,